Hey there, YouTube. It's been a bit since I've done a market internal review, so we're going to go ahead and get right into it. We had a pretty interesting Friday. Some Trump tariff comments with regards to China seem to spur a little bit of a pullback here. And I'm going to go ahead and show a couple things that I was discussing with Discord. I thought it would be good for my YouTube following to see some of this information and see if it might help. So a couple things. Of course, this is quite some time ago now. I think back in August, I had been suggesting that things were starting to feel a little floaty, like we're on air, not as much volume coming in as price was continuing to rise. And that continued, honestly, a little further than I expected. I felt we were going to have something like this quite a while back, and it just didn't happen, which that's fine. Obviously, the market can do what it wants to do. We had some significant volume August 1st. We had some decent volume back mid-September, and then what happened October 10th had definitely exceeded pretty much most of the volume that we have had. If we add a little line here, the volume we saw, the only thing that really beat it out was back in April. So since April's low, that's near the value area low here on SPY for the yearly volume profile, we have mostly regained and obviously made new all-time highs since then. And a lot of the market sectors are running, I would say, not like hot, but decent. Utilities is pretty high up there at 90% over the 200 SMA. Growth, a lot of these, if you really look at them, they're actually not that heavy. Materials is even pretty low. I know that's an AI data center hot topic now. And we're looking at energies, and there's just a lot of things that aren't as hot as you would expect. Then the one thing that has been concerning me and has been a little part of my thesis is the divergence between the slower breadth of the S&P 100. That's the area plot in the background there. That consistently has been showing less participation in this rise for SPY since about early July all the way to now. We flirted with actually flipping a bearish trend on this slow breadth here for the S&P 100, only to regain and start to climb again. And we've been pretty low since then, since about September all the way through. And now we're actually flipping on the bear side. Now here's the thing. The fast breadth trend, we've got a hit here, here, and we're getting awful close here. You could even call this one. I just see the slow area plot pulling back on these particular moments, just like we have here. That's why I'm considering these. And they all align with some local lows on SPY mostly. So I would say that, like, even though my volume regime filter shows a short bias here, it could be, but we landed squarely on the 50 SMA here. Maybe we just had a really decent pullback. We cleared most of September's action here. And I think the one important thing to see when we come into the market Monday, futures will open up here soon, is what do we do with this low volume area? It could be that what ends up happening is, maybe we come a little lower and then fill this area in and continue higher. That could be one opportunity or one scenario. The other scenario is we could really start to reject this price and head much lower, where we also have a single print, which is market profile terms, basically just like one bar at that price. That's that little dash there, yellow dash. And this is a pretty decent low volume area. And we could actually come and visit 609 on SPY. So from the all-time high down, that would be a 10%, roughly 10% correction. And if we look at some of the past moves, back in February, we had a 20%. Let's see, back here, now I don't recall all these events, but here's a 10% move from all-time high over here. This was not quite, so a 6% move. So my point is that it's pretty within standard operating procedure for SPY to see about a 10% correction before continuing. So here's about 9, we could call that 10%. So even on the kind of this bear trend that we developed on SPY that lasted for nearly the entire year, the 2022, most of the dumps were about 10%, and then we had a bounce, and then another 10%, and then a bounce. Right? Some of them are pretty aggressive, 15%. With not a whole lot of a bounce. Just something to keep in mind is what's the average move look like? And then if we come back to 2021, look at some of those, 5, 6%, 10%, somewhere in that range. That's something you should expect from time to time, especially when we've been moving on lower volume. We've been rising on lower volume and making consecutive all-time highs month after month for quite a while now. Yeah, it really comes down to what's the market going to do? Is this really from the Trump tweet or post, whatever? Was the market really just looking for a reason to take some profits? Considering that we had numerous buying here from Trump's posts, retail has been piling in tons of liquidity into the market. It's pretty well known now that a lot of hedge funds, lots of posts about hedge funds not really buying this and basically missing out. So there's a lot of retail involvement in this. But I'm considering that what we will at least see is a short bounce. If we're going to head lower, we'll see a bounce, maybe some consolidation, back up into this big candle here before we head lower, if lower is where we're going. Otherwise, we're just going to continue off doing what we were already doing. But compared to earlier in the year, all of this, we have a lot less volume up here. We'd want to see a lot more participation up here if we're going to see sustained upside. So I'm just not seeing it here, which is a bigger reason, where I've continued to take some profits along the way since buying in April, and I have been stacking some hedges on, because I am kind of heavier on the tech sector in my portfolio, and so I've been grabbing some Q short exposure, some VIX leveraged upside exposure, and different things. So we did see, if we head over to VIX, so VIX took a nice rip from the lows around 16, and we actually breached 22 for a time before kind of calming down into the mid 21. So it's effectively 21 plus. So that's going to be something to kind of watch. A lot of market pricing in potential volatility. We'll see where that goes. 0-day contracts went from being dirt cheap, as they have been for months, to tripling, quadrupling their price just with one post from our president. It'll be pretty interesting to see kind of what happens this week heading into. I'm going to pull this up. I haven't pulled this chart up in probably a good year. I used to cover this quite a lot, but part of the thesis for overextension last month was my monthly TWAP chart. So I don't really talk about these anymore. I felt it got kind of dry and probably boring. You can all go and plot this yourself. To get the most tick resolution, I do use 2-minute charts. It's a lot to squeeze in on a 2-minute chart, but it does work. If you've not watched those ancient videos, tick weighted average price, that's what TWAP stands for. It is an invention of my own, and it effectively is a lot like VWAP, but instead of using volume, it uses tick from the New York Stock Exchange, the NYSE, and we're looking at 500 sensitivity, so we need a 500 or higher tick pop in order to average the price of SPY at that time, and that's set to the month anchor period. That's what you're seeing here. And one thing I found over using this tool for a long time is taking, in this case, August's ending standard deviation values and projecting them onto the next month, which in this case was September. It's pretty interesting how price can respect these deviation levels from prior month into the new month. And back about mid-September, which mid-month, for whatever reason, always seems to coincide with things, we breached the third deviation from August, which is this price here, 660, and kind of flirted around with that, and we actually extended it for a while, and we kept bouncing September's first deviation multiple times. We were really holding that very well and never getting to above second deviation on the month. And when we closed September out, we actually had one monthly TWAP test here before we kind of went back. But basically this whole month, this whole last half of the month, we had about a $12 range. We didn't actually go much further. We made it about 0.7, let's call it 0.5% from mid-September to the end. And so this month, we're looking at the orange lines being the range from September's ending standard deviation values, plotting over October's price action. And so October has been very tight, and then now we've come all the way back to the monthly TWAP price from September 655, and really just struggled with that. So we were over here kind of flirting with 660, and I wouldn't say very strong necessarily, but we did close over it, and we just blew right through that, no problem at all, and under prior month's TWAP price as well. So we cleared a whole lot of, I don't know if you want to use the word important structure, but certainly without much concern or resistance, we just went right through it. So it'll be kind of interesting to see what we did with that. And then the Qs, nearly the same setup. So I think they continued from mid-September. They printed a little bit harder at 1.2% gain from mid to end of the month. But same kind of situation. They're just a tad stronger. They're not at last month's TWAP price. Small caps and the Dow, they're pretty messy. I don't really look at these a whole lot. And that's the New York itself. So heading back into this, so I think it's going to come down to futures market and potentially maybe some things that Trump says this weekend. I know Vance is saying a couple things. I don't know how much I buy that it's really about that. We've got banks kind of hurting. There's just a lot of things going on, and we'll just have to kind of play it day by day on the charts. I mean, that's just what I like to do. I don't necessarily like to predict. I just use this information and go from there. So I think I'm going to wrap it up here, but I guess I gave you a couple scenarios that I could see playing out, a little chop before we continue higher off of all the major market themes right now. Or we'll chop aggressively, come down here and then rise, or maybe for the rest of the year we kind of end up heading back in. So I would be surprised if we come right back into here and stay here into the end of the year. I would be surprised. And I would be surprised if we go like very low back into April range. So I definitely been surprised before. So hopefully that it gives you a little bit of something to use. And I'd love to hear comments from you. Heads up, we definitely have the Discord community starting to get some decent chatter in the general channels, and really appreciate people that are kind of opening up, asking questions. No need to be shy in the Discord. We'd love to have you if you're not already in there. And as always, thank you for watching. Happy trading.